And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, August 9th, 2023. I'm going to start here with the NASDAQ, and I'm going to start on the hourly chart. I may bounce up to the 4-hour, but basically still sticking with my hourly chart. And I just got to be honest with you and tell you that each day it passes, I'm thinking the market's going to reveal a little bit more, making it a little bit easier to determine where we are in the whole scheme of things between what I'm still considering as my alternate view and my preferred view, which is the one that's showing here. And again, that preferred view shows that the primary wave B is complete at that high back in mid-July at 16,062, completed the primary B wave, and we're off and running on the start of a primary C wave. Now, you would think a primary C wave after this should really be looking more strongly south, just going down. And even when I pull it out and look at my 4-hour chart, it's like, wow, it's just not shaping up to be more vertical rather than just kind of moving sideways and then going down and then moving sideways and then going down, which it can do. Don't get me wrong, the sideways moves, yeah, wave 2. This could have been a small internal wave 4 within this third. And then we get another 4, which dwarfs, this one dwarfs that one. So it begins to put a question mark on this. And if I go over and I look at what the alternate could be, A, B, C, X, A, B, and then what this is a diagonal C wave, maybe. So again, I keep looking for clarity for the market to give it, but I don't think the market itself. This is telling us that there is confusion as to where things should be priced and what we should be doing. Or should we really be buying it or should we be selling it? And it just seems that we have a marketplace full of investors and traders, et cetera, that are really grappling with what should we be doing. And now we're holding out to feel that we're going to get this direction from CPI tomorrow and PPI on Friday. And when I look at the numbers of what they're expecting, and I hear some of the narrative that's going on, the expectations are that CPI is going to increase. The consumer price index starts heading back higher. 1/3 of a percentage point, 0.3%. That year over year, 0.3% is an increase. So that inflation is going to increase year over year, 0.3%, July 2022 compared to July 2023. So what is that going to do for the market? Is it going to blow it off? Is it going to think it's like whatever? Remember, we kind of go on this other thing. Fed's going to pause. We had Harkin, or Harkin, whoever was out the other day, talking about, well, yeah, if the numbers are correct, we might just throw a pause in there. And to me, it's like, why are we sending out our Fed governors to bolster whatever when truly what they do, because they're always not congruent. It's not a solid message, or doesn't appear to be. So here we sit. Now, again, this to me, yep, it's a decline. And yep, if we go off of today's low at 15,145, I think it was, so from that high, 16,000, well, yeah, okay, so we're down 800. Maybe a little bit more. But what a mess this is becoming. So my message actually today is like, it's unclear. And I'm going to be looking for some clarity, directional clarity, for what we should be doing both in the bond market, in the equity market, in the dollar, et cetera, et cetera. I would like to get some clarity of direction. And so because, again, what sits up at the top, folks, and I've gone over this, interest rates. And so we have interest rates sitting up at the top, and we come down off of that. And then we have, currency. When we come down off of that, we have bonds, treasuries. Then corporate, which is all the underlying stocks, indexes, et cetera, et cetera. And then down here at the bottom of the rung is us, the retail. Retail is everybody else who lives just outside of all of these. So what do interest rates, higher or lower, how does that roll down the pecking order, right? It rolls down the pecking order from the interest rate, currency, treasuries, or you could put treasuries ahead of the dollar. So you could put interest rates, treasuries, currency, corporate. So it's how a move in interest rates, what's the order that it rolls down through. So first the interest rate, that change happens. It rolls down to the treasury market, which is affected directly by what's the cost of borrow, what's the cost of lending. So, and then we have the currency, and then we have the corporate. So it rolls down. Higher interest rate, lower interest rate, going to affect business, corporations, everybody out there doing business and buying and selling. Then finally down at the bottom, that's me and you in our lives, in our day-to-day lives, what we pay for gas, what the taxes are from the state, what the taxes are from the city that we live in. How much is that going to affect my value, what I have to have in order to pay? Then my credit cards, then what I buy or purchase at the grocery store, right? Everything that we do when we spend money on, when inflation goes up and the prices go up, well, comes out of my pocket. So it's a never-ending battle. And here we are sitting in a marketplace which they're basically telling us, well, we might pause if we get the right numbers. It's like, you know why? Because we're sitting up so high. To tell the truth, in my opinion, would send everything into a landslide. And then what happens? Everything blows up around you before you even get a chance to get it under control. Well, we've given you guys now almost 2 years, and you keep telling us you're battling it, and you keep telling us you're seeing the effects of your interest rate hikes. But yet we're not really seeing it roll all the way down yet. So what gives? And that's where the point I think we're at. Something is going to give. And it may start at the bottom and run it back up to the top. I just don't know. But right now, because I have to take it day by day, I trade intraday, which, by the way, hey, I got to tell you, another incredibly great day trading. Plenty of opportunities, plenty of money to be made. But what does that do for the bigger picture? I don't know. So I'm going to give it my best shot here as to how I see it in its current form, that I'm like, okay, well, this, I like, that's a clean 5, but this 4 to that 4 just dwarf each other. So is this a wave 2? Don't think so. So again, and when I put it out here, if I had to run that alternate view, and then this would still be in, and that this 3 would move all the way up here, and we're in a minor 4 down, which I'm already going to have trouble doing. But this would be the area where this minor 4 will find its low. So we actually got it all the way down to 14,853. That is that low of the previous 4th of 1 lesser degree if this shifted up. Now, look at this. Let's look at this. Right? Rallies, declines. This was an easy 5 to count. Then it got sloppy. So if I had to shift over and demonstrate the alternate view in the futures market, This would be minor 3, way up here. All of this would change, but it still would be 5 waves, but it'd be minor wave 3. And we're in minor wave 4. How do you want to count it? A, B, C, or C. And then what is this? So you have to back it up. A, B, C, X, A, B, and C is turning into a diagonal. And we already are, right? I just got to put my cursor anywhere in here. We're inside the third of the fourth of one previous degree. And we're not really getting any clarity from other sources like, okay, Fed, what are you going to do? How is it going? The numbers aren't reflective. The numbers aren't showing anything that's really getting out of control or anything, et cetera, et cetera. So here we sit in this bubble. That's the only way I can really term it. I think we're sitting in a bubble way high in the ground. So it's like being in a hot air balloon and we're running out of gas to keep the heat on and to keep the air hot inside the balloon. What happened? We start worse, it get worse, it get worse, till finally it just breaks. So if we are under the alternate, we still have a little bit more to go, and then we would be expecting a fifth wave rally to take this thing back up to the moon. Now, I don't think if we come down into here, since this is already minor 5, projections, if we had to shift it over, they would pretty much be the same, unless, anywhere in here, a little bit different. So if we're getting to the bottom of a minor 4, your guess is as good as mine as to what is going to be the catalyst that's going to turn this and run it higher. Because now we are, earnings-wise, beginning to see tech titans crack under pressure of keeping the flow of capital in, the revenue. Is there a revenue slowdown? Does that suggest that we will be going into recession? All of these questions, and here we sit trying to determine how do we prepare, where do we position, what do we do? All right, so on one hand, if it's the alternate count, we got a little bit more down, it'll stop, and then we're going to get a blast out of it. That would be my signal, a blast up and out of it. If it's going to work its way down under this count, and I'm bringing it over, I don't think I can get the whole thing. Yeah, I can. I'm looking at this going 1, 2, 3, 4. I don't like it, but that's how it's being counted. And then 1, 2, 1 of 3, 2 of 3, and we're down, dropping off again. Right? So what does that particularly tell us? Well, we start to go into, I'm just going to start throwing up some fibs for the, well, what if type of a scenario, right? If I'm going to be looking at, we're in that fifth wave, what are my projections for the balance? Well, we're looking at, we almost got down to 15,132. What was our low today? 15,146. Another 14 points, we were down at 618, which is where minute wave 5 would be equal to 0.618 of minute wave 1. First one, though, is equality. Well, that tells us we're going to be dropping all the way down to 14,911. Now, if this is just going to be turning into a 5-wave structure, then maybe we could be counting that as a C wave. Diagonal or not, a C wave. Well, now we're under the alternate view, which has that previous fourth down here below 15,000. So 14,911. Oh, that kind of works. 14,853. Bingo. That's that bottom. There's where the minor fourth wave, as I have it marked right now, ended right there. So it just is going to keep getting weird, but these levels are going to come into play. So again, if we're looking at the continuation of the fifth, which Now, here's the other thing that we've all noticed, right? We do a serious decline. It finishes early in the session, and they buy it all the way back up. We come up, we have a serious decline, and they buy it. Not all the way back, but they buy it back up over 100. Just bing, take it right back up. And then we die again into the close. All right. So, and then try to scoop it up a little bit. So the sellers are out there. And I think, if it's options related, if it's this related or whatever related, or people are just determining, okay, I'm done. I'm going to take some profit here. I'm okay. And we start moving out. Who knows? But the sellers come in and the buyers buy it back and the sellers come back. So we'll see what happens. But again, if I'm just going on 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. Now that would put us down here. And then can I put a minute 5 and then maybe a minor 1? Or am I going to be putting up 1, A, B, C, X, A, B, a strange diagonal C, also bringing us down into here? Very possible. So this is why I talk about running both the alternate and the preferred, because they're sharing a lot in common right now about where the ultimate destination of each may end up. Now, if this is actually going to turn into a minor wave 1 down, then yeah, we're going to go a lot further than where that minor wave 4 would be expected to go. But that's how long we have to wait. So what can I look for tomorrow? That's really the big thing. Direction is going to be determined at 8:30 a.m. I'm going to leave it right there. If they're going to reject the CPI, if they're going to reject that this inflation is not being tamed and it's now rearing its ugly face again, then I think we head down strongly, similar to what we've seen here, where we've seen the Dow drop 300 or 400. We've seen the NASDAQ down 200 or 300 points, et cetera, et cetera. So that's all very possible. So I believe direction will be determined pretty early. If it comes out reasonable, if it comes out anywhere acceptable, we might get a quick dip and then the buyers just move back in and we'll find the direction that way. And they will and they'll just walk it up. They'll not walk it up, they'll run it up. So my point here is, again, for those that are carrying positions, you're living in a tough world. It's a very tough trading world right now, because either you got to adjust your position, you got to get out of your position, you got to add to your position, whatever you got to do. The movement is going to be dictating what you're going to you're either going to be forced to do, or you just necessarily have to do to keep your position, et cetera, et cetera. As a day trader, it's going to be a fun day. And I hate to say it that way, because my job as being an analyst here is not made any easier by what this market is doing. But when I'm moving in and I'm going to open my trade room and I'm going to start trading, the one thing I tell people is like, Elliott, we have to leave aside. I do recognize things on my 5-minute chart, my other smaller time frame charts, and then I do get Elliott off of that, and you might even add some fibs to it. But the market is the market, and I'm going on the order volume profile. I'm going on points of control, high value area highs and low, and my moving averages, and just the candle patterns, the patterns of the candlesticks. And that combined leaves me open to buy it when I need to and to sell it when I need to. And being a day trader, long-term position to me, folks, it could be 3 minutes. That's a long-term position for me when you're trading quickly in these markets. But there's a fair amount of money to be made on a daily basis. Now, what do I think? I'm going to tell you right now, if this is 1, 2, 3, 4, then we're coming down in a 5. That 5 should at least probably reach down closer to 15,000 before all is said and done. If they don't like that number, we're heading down into here, into here. And it can do it pretty quickly. And then we will, then it's going to be up to the market. Then it's like, okay, is it the end of that minor four and we're going to start to rally? Because if it does, remember, if it is a minor fourth wave and it finishes down here, you're looking for this thing to skyrocket right out of it. We've seen this from the market before. That's what I would expect to see. Again, that would have to be a dynamic, solid bottom, and something has to turn it to make it jackknife out of it. V bottom, V bottom. This kind of was a V bottom. On the hourly chart, this you could say was a V bottom. It got caught up in stuff there, but basically it just rallied, right? They rally. You see these rallies, but they can't stop. So in other words, if it's going to finish a minor four, we're going into a minor fifth wave. That minute wave one has to be just go and not look back. That's my call. Now, so again, depending on what and how they want to interpret that CPI number tomorrow, and how far it will get in actuality when you got the PPI number back to back coming on Friday. So, and also tomorrow we have, excuse me, initial jobless claims. And the word that I'm getting on that is that there are going to be less people getting jobs, more unemployed. Is that going to be positive? Is it going to be negative for the market? Is that positive for them? So our employment market is not as robust, or it just wasn't as robust in July or this last week in August when we get this. It's not the monthly report. It's the initial jobless claims. So again, how they want to interpret this stuff. Ultimately, if it's a wave 5 and we're doing it in the diagonal 1, 2, 3, 4, or 1, 2, maybe see 3, 4, 5, I do think we can get down into here. I really do. And I think they can do it lickety-split just like they have. We shall see. Again, I can't go past that point because the market basically is not letting me. So if I had to go out and say, oh, that would just do wave 1, and then we got a wave 2, and then we got this big gigantic wave 3, I'm not sure alternate or preferred is actually the one that's going to be moving us forward. Still yet to be determined. Over in, and first of all, moving averages, just to finish up here, they're all still looking pretty solidly lower. Let's take a peek here. You can see we're below the 20. We closed below the 20 2 days ago, and now we're well below. And we got the 50, kind of cruising right there at 15,060 approximately is where the NASDAQ daily 50 moving average sits. A break below there, we're toast. We'll move. I believe we would move very quickly, even on an intraday basis, very quickly down below 15,000 towards these levels, these support levels, 14,911, 14,853. These aren't as effective, all these ones in between, because it's not an irregular. So I could clean that up. But in any case, it's going to be interesting. Over in the S&P now, it actually kind of is the same story in the S&P, and I'll fill in the blanks. We'll throw up some fibs in here as we see fit. So once again, I will show you under the alternate. Let's kind of open this up so we can take a peek. Under the alternate, what we have, A, B, C. That's the first ABC. ABC X, A, B, okay. What do we got going on now? 1, 2, 3. Is that all 3? Maybe. Or 1, 2, 1, A, B, C, 3, 4, 5. So we still have a ways to go there. Now, putting it out here, if that would just to complete if we really are looking at the alternate here, and this 3 is up here, we're looking for the 4. The 4 of one lesser degree again is here. So we actually can be, looking at 44.50 on down to 44.15-ish for this minor 4. This is the alternate. So again, let's just go over it. So I want to make it very clear what we're looking at, right? 43.29 is the bottom of minute 4 in the SPX. You're gonna have to add a little premium because we're into the December contract. Then we have here the September contract. Here would be that 4 of one lesser degree. We're right now not really even getting inside of it. So getting inside of it is a drop below 44.40 down to 43.30-ish. What could drive us down there? Let's go back to that hourly chart. So if we're coming down, this didn't pan out, so I'm going to get rid of that. And now on the SPX, and we're going to go back over to the ES. That's the one I want to work on. So on the ES, 1, 2, 3, 4, bing, bing, bing. So let's draw the same deal. If we're looking for a minor fifth wave, then we're looking for minute 5. And see here, because it overlaps, so that's why that comes all the way down to here. So here we have our fibs. Let me clean it up right away because we get way too many numbers in there that we don't need. And we'll leave these on there and there. So what we got going on is that where minute wave 5 would be equal to minute wave 1 at 44.60, still not quite inside, starting to get inside of that alternate. And then below that, we have 1.618. We've already surpassed and now just hanging out around the 0.618. And again, for whatever reason, that's what they do. It's now done it 2 days in a row. Drop below it, come back up, then finally shoot, drop below it, shoot back up, drop back down, hang out at. So there's what we'd be looking at, even if this was going to be counted as a diagonal, strange as it looks. 1, 2, 1, 1, 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, 4, 5, very possible. That's all possible. And again, that would just mean that CPI goes out the door. We don't like it. Boom, boom, boom. Fed's not going to pause. Fed's not going to. They're going to have to raise. The war on inflation is back on. Are we going to be dropping into a recession? We'll be back on, et cetera, et cetera, et cetera. But just getting out of position. Don't forget, we still got the Moody's that downgraded five large U.S. banks. We still have Fitch that downgraded the United States. So we got the bond market hanging out because we have all of these financial needs from the government. The government needs to auction off some bonds. They need some money. They need a refund. And that happened today. The 10-year note, they managed to get it down below 4, where they auctioned off a huge amount of 10-year notes. And yeah, so that's what's kind of keeping these guys a little bit alive. We'll see what happens. In any case, this is what we're going to be looking at. I do believe we still have downside no matter what, no matter how I can count it. There still is additional downside to do. There's our support. There's the next level. In between, yes, I'm sure that there will be some additional resistance. or support. But fib-wise, this is what we have. Now, I'm not going to be adding the larger because I'm just not certain that that's what's in play right now. So to be looking at like here, I tell you, this is what I got just for, a fifth wave down. If they really jack it, oh, guess what? 1.618 puts us right inside that previous fourth, which was a triangle, but here it is. And coming all the way down would just mean we hate the market. We got problems right here. So for tomorrow, again, I believe direction will come at 8:30 a.m. Eastern when we get those economic numbers, and it's going to come via CPI, initial jobless claims. I do not think that anything else is coming out. Let me just take a quick peek. No. Well, we got the Treasury budget at 2 o'clock. And so, yeah, we'll see what they want to do. So we have initial jobless claims, consumer price core, year over year. That's the one where they're expecting the increase. And then the core, year over year, a slight decrease, strange as it is. But the core CPI minus food and energy, why? That's where the inflation is. Why take it out? I don't know. Anyway, that's going to be my spiel for today. It's not easy. And so I do believe we still have some additional downside. And then we'll be able to reassess. We will likely have enough additional information on forward guidance type stuff. And we'll see what happens. Next update will be on Thursday, August the 10th.